Williams here. Well, I want to say one thing. If you followed my series of videos and you really paid attention to the two videos, one, take advantage of inflation. I did not do an opposing video, take advantage of de-inflation, because I didn't think about it. And 3.0, globalism, 4 point something rather, nationalisms. I forget what the video's called, but I'll tell you what, I'll put the link to both videos in the transcripts, in the link. There's some new information on the link that's very timely pertaining to the bond market and the political battle that's going on with interest rates. Definitely concentrating on the international bond market, because these bonds are sold and traded in between nation states. For the most part of it, I'm going to make it short. And other thing I do want to say, there was a bond auction on Tuesday. It closed around about the close of market. Subsequently, Monday and Tuesday, bonds were off the chart. At least the ETFs were. Buying and selling. The adverse and the inverse were as equally spiked. And today, except for TLT, the 20-year Treasury, that broke resistance a couple times, and could have finished above resistance. I have to look. Maybe it didn't. If you would have watched my series of videos, you would have done extremely well the past couple of days, no doubt. All my calculators were spot on. So at the end of the day, this is really the true rundown of what's going on. One, bond auction, bonds sold off, bonds were bought. Notice the only market that broke resistance was the NASDAQ. Well, all the ETF, inverse adverse traded bonds, are not all of them, but most of them, Vanguard and so on, are on the NASDAQ. So the paper contracts that are connected to actual bond issuance, auction, blah, 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 are 100% above what they're really worth. Or they reflect 100 plus what the actual bonds are doing. What does that do? What is that? That's like a turbocharger. So the energy or the market flow or the follow the cash. That's what Anton Quill says. Follow the cash. The cash left the bond market, went into the NASDAQ. This is the question. Tomorrow, Tuesday, 27th. There's still a little bit more energy that's going to go into the NASDAQ. What happened today was a bottleneck. The energy bottlenecked in the NASDAQ. The question is for tomorrow, is that energy going to go into the S&P and then roll into the New York Stock Exchange, or maybe it flows into the Russell? Or does it do it all at the same time and the market stabilizes? So within reason, the Fed and all the other global Federal Reserves, every democracy has some type of Federal Reserve. They're all working in conjunction to prop up the world market. It's not at this point, the energy flowed into the NASDAQ, which is more positive for the whole world. You remember S&P is the top 500 U.S. companies, and the New York Stock Exchange is a whole host of companies. So my prediction is going to be this. The NASDAQ will be high tomorrow. Following the NASDAQ going higher, the New York Stock Exchange will go higher above resistance, and then the S&P will follow. You can hold me to that, definitely, and the market will be up on Tuesday, not substantially higher, but higher. Any kind of residual effects from any kind of virus will be obfuscated. Anyways, I'll go ahead and publish this. You guys have a happy day Thursday trading. Hopefully you did well today, and didn't take the bait. Those ETFs were so high for the past 2 days, but yet and still all the repo and all the stimulus was erased. I think we're going to get a balance. I think we're going to get a balance back to what we were once seeing, maybe not as hyper, but this is a de-inflation, re-inflation, more like what was going on in 2018. And for the day traders, a very healthy environment of volatility. And once again, back to the long-term investors, 401k people are going to lose out. So we're back to 2018, in my opinion. But you can hold me to those market movements. This stock review. Thank you.